Is Bitcoin and every other altcoin going to zero? No, no, no. A lot of people are very concerned about what's going on in the crypto markets right now with all the fear and contagion from FTX, leftover fear and contagion from Three Arrows Capital, UST, and Luna. But if you stay to the end of this video, I'll share with you exactly what I'm seeing in the crypto market right now and an unpopular opinion that could help you make a lot of money in the next bull run. Welcome back to another episode of Technical Analysis Academy. I'm Matthew Brienen. Before we get started here, I want to tell you a little bit about Crypto Charged. At Crypto Charged, we do 5 live shows a week, just like this one here, covering everything from macroeconomics to technical analysis. We have a coin library with a bunch of vetted projects showing you where we want to buy them and where we want to sell them, as well as weekly play opportunities so you can make money regardless of which way the market is going. You can jump on our special with TA Academy for 40% off. Again, that code is TA Academy for 40% off. Now, let's get into the markets, see what's going on out there today. When we look over here at the Bitcoin price chart, it's really not even reflective, in my opinion, of what's actually going to be happening in the markets as this contagion spreads. We know that FTX was just one of the many exchanges that fell, and it was kind of the top of the pyramid in relations to some of the other people that were exposed. Now, we've seen a lot of other hedge funds fall because of this, and most recently BlockFi, who was actually sued by the SEC in February of this year for over $100 million. Now, some of that money that BlockFi had was loans from FTX. So it's just kind of furthering this contagion, furthering the amount of leverage that's actually out there. And I think we're going to see a lot more big players exposed as over leveraged or not having as much crypto or assets on their balance sheet as they state. So let's take a look at the Bitcoin price chart here. And if we take a look at where we are currently, we're in still considered a flagging structure. We're here on a 6-hour frame. If we actually come down to a smaller frame, like a 4-hour, we can see a little bit more closely how this flagging structure has occurred. And when I look at this, it just screams more bearishness to me. I know a lot of people are out there saying the bottom's in, it came in at 15.5. And I heard the same story when we were, down there towards 17K, that the bottom was already in, right? That was the final capitulation move. But like I said, we have a lot of this macroeconomic backdrop right now that is not accommodative to risk on assets like stocks and cryptocurrencies. We're not seeing stocks perform exceptionally well right now. We're in fact seeing metals not perform very well right now. And crypto is again under a unique set of pressure right now. In addition to that macroeconomic landscape, it has yet to improve. We have yet to see the Fed say we are not only going to slow the pace of hikes, we're going to stop hiking altogether because we need to preserve the economy. We need to prevent a recession from happening. We need to protect the markets, right? We haven't heard that language yet. So we still are very hawkish on the markets. So when I look at the structure on Bitcoin, the reason that this is a bear flag is because it came from a bear move. So you guys can see that this was a big down impulse move, and now we are accumulating or flagging after we came from a down move. We always want to trade with probabilities when we're looking at cryptocurrencies, stocks, metals. It doesn't matter what asset you're looking at, foreign exchange. We always want to trade with the trend. And the trend right now is down. And we see that there is continuation structures or bear flag structures forming all over the cryptocurrency market right now. That's very, very apparent with Bitcoin. So again, from my grander perspective of where I think Bitcoin needs to come is somewhere in this green band here. If we go ahead and take ourselves out to a 3-day chart, we can see again where all of this price action comes from, that there is a lot of liquidity down in these areas, especially where this red curved shape is down here. This is where a lot of banks and institutions placed their orders. They sold a lot of their coins up here, took a lot of profit up in this distribution structure, and they very likely want to rebuy a lot of their coins down in this area, and that's between $11,000 and $14,000. That is going to be an excellent place to pick up Bitcoin for a generational buying opportunity, especially if we're looking at Bitcoin at 100K or more next cycle. That's absolutely a phenomenal return. If we even look at the most recent swing high, swing low here, and we take our 2018 high, swing low, we can see that we actually almost reached a perfect 4.236, around $73,000. That's what we were calling for, give or take, over at Crypto Charge. And you guys can see that if we just continue to hike our way up through these Fibonacci's, that $135,000 is a reasonable next target. So if you're considering, should I buy any Bitcoin? Should I wait to see if it goes to 9K or 8K? I really wouldn't be trying to negotiate with yourself mentally 9K versus 11K if the targets are somewhere between 100 and 130K. And these are supported by Fibonacci's. We've done a lot of Fibonacci theory on the show, given a lot of examples looking at the historic price chart all the way back to 2011, and shown many, many different ways you can draw the Fibonacci's, and all of them have shown that these full extensions do get hit at some point in the future. Now, let's take a look over here at the XRP price chart. And XRP, the Fibonacci range that we've selected here for XRP is one that's very, very old. So if we come out to this 2-week chart, you guys can see that we actually selected a swing high, swing low all the way back here from 2014 down to these lows that got hit multiple years in a row until we finally broke out and really hit some of these big extensions, the 55 extension up here. And you can see that we've really only come in for a retrace most recently. This was a 34 extension, not breaking out into a new all-time high. It was a retracement that came in, and now we're pulling back off of that retracement. I personally will be throwing the kitchen sink at XRP if we do visit this 2.618 around 16 or 17 cents. That's where I will be happily selling my left kidney to buy as much XRP as humanly possible. But I do have plenty of limits down here between 20 and 25 cents. You can see historically the 4.236 resides right here, and we do see those retested often. One thing that I do with my XRP as well is when I make a purchase of XRP, especially if I buy it with a debit card and uphold, it's a small fee, is I get finality with that, and I can take my coins offline. I take them into cold storage. I put them on my Ledger Nano X right away, and that is a really big beneficial thing that you should be doing regularly, because it's the only way to keep your coins safe. You spend all this time earning your money so that you can buy these coins, so you can, have more money in the future to invest with. But if you trust a CeFi exchange like FTX, Coinbase, Binance, right? Who knows who's actually solvent? And all that hard-earned money is on coins on exchange that you don't even trust, and they go down. All of those coins are gone. No one's going to help you. No one's going to give you anything back. Most bankruptcy cases give somewhere between 5 and 10 cents on the dollar. So I take all of my XRP, put it in cold storage, because when it does come time to sell, I have the opportunity to look at which exchanges are solvent, which ones are operating properly, and I can move my coins onto that exchange to go sell them. I would highly encourage you guys to do this, not just with your XRP, but with all of your digital assets that you care about. The last chart I want us to take a look at today is the API3 chart. If you guys have not checked out API3, it is a strong competitor to Chainlink. I do love what Chainlink's done. It's done hundreds of percents in gains over this last bull cycle. But if we're going to look at the next generation of oracles using offline storage, API3 is that guy. So when we look at where API3 is at now, it's significantly below its previous all-time high. We have our previous all-time high all the way up here, around $10 per coin. And you guys can see that we've really been in this deep downtrend for a long time now, right? We were able to hold around $3 as support for quite some time, broke down below, set a fresh low just below $1, and now we've been creating a bit of a flagging structure in here. And this flagging structure is no different than the ones on Bitcoin, XRP, and a variety of other digital assets right now. So if API3 does decide to break down below $1 again, I will be aggressively buying as much API3 as humanly possible. Again, if we look at this from a Fibonacci standpoint, and we were to say, okay, let's say that we have our swing high up here, and let's say that we're even just looking at our current swing low. Even if we were just coming for a retrace, meaning API3 is not going to make a new all-time high, we're just going to go ahead and balance the market out and then go and set a new low. API3 is dead, right? If we look at that from current market price, just to the 702 where assets do like to turn over, that is a 400% return. What about the $1 mark, right? We revisit the lows down up to the 702. It gives us a 635% return. Now, what if it breaks deeply below 50 cents, right? What if we say, or it breaks down towards 50 cents? Let's go ahead and break this down here. Let's go ahead and bring it down towards about 50 cents, right? Let's say that that's what the fib range ends up looking like, that we end up setting our low somewhere around here around 50 cents. Not saying that it's going to get there, but let's just say the markets get bad. Altcoin market gets really, really wrecked. Everyone's really, really fearful. We get the opportunity to buy 50 cent API3. What does that say? The 702 is up there towards $7.50. From that 50 cent mark up to here is a 1,400% return. That's not even including making a new all-time high. That's just retracing to some of the previous levels where API3 traded previously. And you guys can see here that a full extension suggests a $42 price point for API3, 50 cents up to $42. That's a nice 8,500% return, okay? Now, of course, when we're trading, we never want to be holding every last bit of our bag to that moon target and not taking any profits along the way. The first thing you want to do once a coin gets moving and you see it break out and really, see yourself in some nice profit is to pay yourself back. It's important to pay yourself, and not just pay yourself by taking some profit and putting in stable coins. Withdraw it to your bank account. See those numbers in your bank account. It is one of the best tools you can utilize to help balance the emotional trauma that we experience here in the cryptocurrency space. Not only taking the profit, but seeing that profit in your bank account is a great way to encourage yourself to continue to use good risk management, to continue to take profit on the way up, and will really set you up to be profitable with future cycles as the cryptocurrency market matures. I hope this was helpful for you guys. Can't wait to see you next time on the next Technical Analysis Academy.